In the last week, the Vine token has been outperforming massively. The question is, who's actually buying here and selling here? How much higher can Vine go? Because the market cap is still relatively low, maybe there's some more upside potential. Let's have a look at the data most people are not considering. Now here's the news. Elon Musk posted 4 days ago that he's going to bring back Vine. Vine being closely associated with the X platform, formerly known as Twitter. There's going to be a twist. It's going to be an AI-based platform. Now, this is not the first video on Vine on this channel. I already published one half a year ago. And at the time, there was a lot of speculation. The video just performed like an average video, but it did make 158 subscribers, much more than a video today. With that recent rally, Vine is now the third largest trending token on the Solana chain, with 7.7 million worth of liquidity. Now have a look at that ratio. It's quite a lot of liquidity relative to the market cap. The Pump token, for example, has only double the liquidity, but roughly 6 times the market cap. So this gives us an idea that there's still quite a lot of on-chain activity happening for Vine. It's not just all perpetual futures and centralized exchange trading. In the last 24 hours, we saw 5,300 wallets interacting with the token. And of course, the majority is buyers, not sellers. And that pushes the price quite high. And so on-chain, we've got almost 100,000 wallets now that hold some Vine tokens. We do see quite steep growth in the last month of the number of first-time traders. The number of recurring traders is also growing. On the right side, we see the number of token transactions. Again, since the tweet by Elon Musk, the activity around the token grew massively. Vine is not just a random meme coin. The Vine coin actually got launched with the support of the Vine founder. And that's why initially there was so much hype around the asset. There was so much decentralized exchange trading volume. This is now the daily volume in US dollars over time. Unfortunately, after the initial launch, the activity died down. And now it tends to come back somewhat, of course, not to the same degree to what we have seen during launch times. Here's again the trading volume, but this time we normalize this to 100% per day. So you can see, is it small retail that's currently trading, or is it rather the larger wallets that are trading? And we do see, especially in the last few days where trading volume picked up, that the bigger wallets become more active again. Now here's one of my favorite information. It's the number of retail investors versus whale investors over time. I like to look at the statistic for pretty much any altcoin on this channel. And the way we make the differentiation is by looking at how many tokens does a particular wallet hold. So to be counted for the chart on the left, a wallet has to hold at least 7,000 Vine tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, it's 70,000 tokens or $10,000. On the right, it's $100,000. We can see how all wallet cohorts started buying again after the Elon Musk tweet, but how, relatively speaking, the growth for the whales was the highest. And so it's no surprise that when we look at all of the token ownership, that more and more of the tokens now go towards the wallets that have at least $100,000 worth of the token. So here's the ownership of the token based on the different wallet cohorts. So in total, we've got 100%. And the whales are here in gray. And they did recently expand their ownership quite a bit at the expense of the smaller wallets. So the big guys, the smart money, is buying Vine the fastest. And so that then begs the question, if currently the smart money is buying in and is speculating on higher prices, how much higher can Vine realistically go? What we've got over here is an overview of the Pump.fun ecosystem tokens, and Vine was launched via Pump.fun. The market cap is currently at 150 million, and it's actually not that large. The largest Pump.fun ecosystem token is at 1.4 billion. A 2x from here is definitely possible, maybe even a 3, 4, 5x. It depends on how much involvement the centralized exchanges will have going forward. The involvement has already increased. So now most trading volume doesn't happen on chain anymore. It actually happens on MEXC, OKX, Gate.io, etc. And we've also got perpetual futures on the price now. There was $848 million worth of trading volume in the last 24 hours alone on BYD-Fi. Most of those perpetual futures traders are betting on rising prices, so the longs have to pay the shorts to get more price exposure. And the open interest has absolutely spiked. So it's not just the whales that are buying on chain, it's also the people that bet on the price via derivatives, via the perpetual futures with leverage that get involved more and more. There is some correlation between open interest and price development. If we take away those extreme values, we can see that when open interest spikes, the spot price tends to go up as well. When open interest goes down, the spot price tends to go down as well. So there is some correlation. Seeing now the spike in the open interest is not necessarily that great. And especially since open interest has a very similar size compared to the entire market cap of Vine, there might be some short-term manipulation involved. In general, perpetual futures capital tends to be short-lived. It tends to move from asset to asset, and when it goes away from an asset, then the price tends to go down as well. The trading volume on the perps is also relatively high, and again, there is a correlation between trading volume and price. And because of the rally, it's especially the shorts that get liquidated. But there aren't too many shorts that get liquidated because, again, most people are currently betting on rising prices of the Vine token. And so that's the fundamental problem with Vine right now. The market cap is still relatively low, so there is some more upside potential. On the other hand, we do have a lot of short-term capital already deployed in the token, especially relative to market cap. There is a case to be made that it might make sense to just ride the wave and potentially use a trailing stop loss, right? So adjust the stop loss as we go up in price, and then when things turn around, to exit very, very quickly. I'm personally, though, a bit more risk averse. So I'm simply just waiting for this to play out, for potentially the market cap to increase even further, and then maybe bet on falling prices, because at that point open interest is probably going to be even higher. It might start to deflate, and as open interest deflates, right, as the short-term capital exits Vine, that's the perfect time to then bet on falling prices. That's what I'm looking for. Now, this market is great for some, but not so great for others. People that bought Bitcoin, they're close to all-time highs, but most people that have a diversified altcoin portfolio are actually down. Because here's the problem. Returns tend to concentrate in just a few assets. Yes, there are a few outliers that do outperform Bitcoin, but the vast majority, especially of the smaller altcoins, they tend to do much worse. The altcoin market as a whole, since the beginning of 2022, so in the last 3.5 years, underperformed Bitcoin by 74%. And that's just the comparison of market caps. It's not the comparison of prices, because that's even worse. Because the altcoins tend to have an expanding supply in terms of tokens, and that expansion in supply tends to depress prices even more. Have a look at this here. This is my favorite example. This is Balancer relative to Ethereum. That's just on a linear scale, but on a logarithmic scale, it looks very similar. We just have continued underperformance. And the reason for that is simply more and more tokens hitting the market. Either the insiders are selling, the team is selling, the early investors are selling, the users of the platform are selling, maybe because they get some incentive token that they can then distribute. It's all kinds of stakeholders that tend to get tokens over time. And this is not just true for Balancer, this is true for the majority of altcoins that tend to do worse than Bitcoin. And so we can actually flip this around. Instead of buying the altcoins, instead of trying to find the needle in the haystack, the one altcoin that does better, we can flip this around. We can bet on most altcoins underperform Bitcoin. Have a look at this. This is Bitcoin relative to Balancer. So we go long Bitcoin, Ethereum, and Solana, and we go short the bad altcoins. Then we can get performance like this. A very nice constant growth chart that is backed not just by hype, but by the fundamentals, simply the insiders cashing out. This is going to stay a valid driving force of altcoin prices for a long, long time. I'm actually making money with that strategy already for close to 4 years. So my performance is this line here in black. And if I had just dollar cost averaged into Bitcoin and done nothing else, I would have only gotten the light gray line in performance. So we don't have to get the 10x or 100x altcoins in order to do better than Bitcoin. This relative valuation here, right? It went up in the last year by roughly 300%. And so I did make a slight change in how to approach those relative valuations. In the early days, I was borrowing something like Balancer, right? I would take out a loan in Balancer, denominate it in Balancer, and then I would swap this against something that I'm bullish on, let's say Bitcoin and Ethereum. And I would just play this relative valuation. The issue with borrowing and lending platforms is that we can't add too much leverage and that we can't really manage our risk with stop losses. On top of that, the asset selection that we get with borrowing and lending platforms tends to be rather low. But with perpetual futures, we can trade many more options. And so I started trading perpetual futures with those relative valuation bets myself, and I did this experiment for 2.5 months. And during those 2.5 months, the performance was very impressive. I started with 40K and moved this to close to 60K again, just in 2.5 months. And I'm sharing all of my trades, right? For example, over here, this was a short on Pengu relative to Solana that I then had to close just a few hours afterwards because Pengu just crashed. And our community made good money with that. Now, many people are scared to learn such a strategy because it's more complex than just buying a meme coin, right? We are going long one thing, we are going short another thing. It seems quite complex and it seems like there's risks that are hard to understand. But that's why I created separate tutorial videos on just that topic. You can just watch those tutorial videos and then learn the trading yourself. Now here are a few trades shared by our community, and it's really about risk management. It's really about setting yourself up relative to other altcoins. Now in theory, this looks all good, right? I made money with this, not just short term, but also long term. But the central question is always, will this apply to anybody that's trying to learn the strategy? And I think that's actually possible. What I will do is when you join this membership here, right, the premium membership, I will share my current favorite trade. And if that favorite trade does not lead to profit after 1 month, then I will refund you 100% of the membership fee. The fee is currently $125 per month. The target is that you become a winning player very, very quickly. So while all of those tutorials are useful for the long term, at the very beginning, you just have to watch 2 of them. And that's using perpetual futures on Hyperliquid and risk management with relative valuation bets. After you've watched those 2 videos, I will share my favorite trade. You just execute on that trade based on what you've learned over here. And there's a very good chance that with a chart like this, you will be in profit after a month. Again, we are playing the fundamental dynamics of the market, the token inflation, and the fact that most altcoins underperform Bitcoin, Ethereum, and Solana most of the time. Now, I was thinking about this. How can I make this even safer for the people that don't want to watch the videos, that don't want to set up the trading themselves, that don't want to do the risk management themselves, that simply just want to provide capital? Let's say you've got a lot of capital, but you don't have a lot of time. For those people, I've set up a copy trading capital pool. So you can simply provide money to that pool and then automatically execute any trade that I'm doing as well. The copy trading feature is available for everybody that's on the annual membership. So you're also saving $250 per year on that membership. But the main feature is the automated copy trading where you can get this return. And this has launched 2 weeks ago. And so far we are up 4.7%. And the very first days when I set this up, I didn't yet trade anything. And so that's why there's no trades, why this is going sideways. That's why the APR is actually lower in this estimate than what we're actually achieving. I hope to get this long term above 50%. It was above 50% when I traded myself. Now we are moving more capital, so the APR can decline. But the target is at least 50% per annum. And so you can run the numbers for yourself, whether or not it makes sense for you to join the annual membership for premium. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.